Today on the FinTalk channel, we're talking about Powell Industries. And imagine watching like a full 30% of your core business just evaporate in a single quarter.
Yeah, that is usually a total death knell for a company.
Right. But somehow, at the exact same time, you watch your unfulfilled order backlog just explode to the staggering $1.6 billion. It is a mathematical anomaly.
It really is. I mean, those two things just don't normally happen together.
So that is exactly what we're unpacking today. We're looking at Powell Industries, ticker symbol POWL, drawing our insights directly from their fiscal year 2025 Form 10-K, which closed out on September 30th, 2025.
And we're also pulling from their freshly filed Q1 2026 Form 10Q.
Right, which covers the quarter ending December 31st, 2025.
Okay, let's unpack this. What exactly does a legacy industrial manufacturer even do to navigate that kind of volatility and come out, wildly profitable?
Well, to understand the numbers, you really have to understand the physical reality of their products. I mean, Powell isn't building consumer software or like off-the-shelf electronics here.
Yeah.
Right, they've been around since what, 1947?
Yeah, 1947. And they operate exclusively in this heavy, complex industrial space. So they design, engineer, manufacture, and service the equipment that distributes and controls immense amounts of electrical energy.
Like power control room substations.
Exactly. And customized e-houses, heavy-duty switchgear, and these highly complex circuit breakers. Things designed to protect really highly capitalized, electrically powered operations from a catastrophic failure.
So think of a sprawling petroleum refinery or a modern power plant or even like a hyperscale data center. You can't just plug a massive industrial campus into a standard municipal power grid.
Oh, definitely not. The voltage and amperage required would just incinerate standard wiring instantly.
Right, so they need a customized, strictly secured method to step down, distribute, and control that energy flow. I like to think of it like this. If the regional power grid is the beating heart of an economy, Powell builds the central nervous system for these localized facilities.
That is a great analogy. They create the literal physical pathways, the
Yeah.
copper, the aluminum, the steel enclosures that safely route electricity.
Just to keep operations running without a catastrophic meltdown.
Yeah. And if you are an investor looking at the raw financial metrics right now, the pulse of that nervous system is exceptionally strong. I mean, for their full fiscal year 2025, top-line revenue hit $1.1 billion.
Which is a really solid 9% increase over the previous year.
Right. It's steady, reliable growth, but it's what happened in the subsequent quarter that fundamentally changes the thesis here.
Yeah, because by the end of Q1 2026, which is just 3 months after they closed out that annual report, their order backlog jumped by 14%.
Which is massive.
It is. They stacked up an additional $250 million in unfulfilled contracted orders in just 90 days. That pushes the total backlog to $1.6 billion.
But a 14% jump in backlog and a 9% increase in revenue, that isn't just a story of a legacy company doing more of the exact same thing.
Not at all. Hitting $1.1 billion in revenue and a $1.6 billion backlog requires a fundamental shift in where the money is actually coming from.
Far from doing the same thing. If we connect this to the bigger picture, you uncover a drastic strategic pivot happening beneath the surface.
Right, because historically, Powell's fortunes have been deeply tethered to the petrochemical market, haven't they?
Yeah, it's been their foundational revenue stream for literally decades. But in fiscal 2025, revenue from that traditional petrochemical sector dropped by 19%.
Wait, a 19% drop.
Yeah, and then in Q1 of 2026, it fell another 31%.
Oh, wow. Okay, so as an investor, if a company's traditional core sector is dropping by 30%, shouldn't investors be panicking? Like, how are they replacing that lost revenue?
Well, a 30% drop usually means a sprawling factory floor suddenly has idle hands. But the decline in petrochemicals wasn't a sudden loss of market share.
Oh, it wasn't.
No, it was largely driven by the natural anticipated life cycle of their projects. They are nearing the completion of a colossal mega order they secured back in 2023.
Ah, got it. Coupled with this generally lower new booking activity in that specific sector.
Exactly. What's fascinating here is how aggressively Powell hunted new capital flows. They couldn't just sit around waiting for the petrochemical capex cycle to turn back around.
They had to pivot instantly.
Big time. And the absolute standout is the electric utility sector. That segment effectively caught fire in fiscal 2025, growing by an astonishing 50% to reach $279 million.
And it didn't stop there. It accelerated, growing another 35% year over year in Q1 of 2026.
Right.
And a huge driver of that momentum was cemented during the third quarter of 2025 when they secured an award for a new power generation plant.
Yeah, and that specific project represents the largest single electric utility award in the entire history of the company.
Which makes sense. We're witnessing a systemic global resurgence in power generation investment right now.
Absolutely. Increased electricity demand from industrial reshoring, electrification of transport, and grid modernization has forced utilities to just massively upgrade their infrastructure.
And Powell positioned themselves perfectly to absorb those capital expenditures, but the electric utility sector is just one side of their pivot.
Yeah, there is another major component.
The true wild card, and the sector that completely reshapes how you might value a heavy industrial company like this, is their commercial and other industrial segment.
Which is effectively Powell's pure-play tech infrastructure angle.
Exactly. In the Q1 2026 report, they detail securing over $100 million in projects specifically for data center infrastructure in a single 3-month window.
And the scale of these modern tech facilities is just difficult to overstate. A single one of those data center projects secured in Q1 was worth approximately $75 million.
Just one project.
Yeah, just one. And if you consider what goes into a $75 million electrical infrastructure contract, it illustrates a crucial reality for investors. Today's hyperscale data centers are practically industrial power plants in their own right.
Right, because the power density of a modern server rack, especially those running advanced silicon for machine learning and artificial intelligence, requires immense amperage.
Immense. But more importantly, it requires absolute, infallible reliability.
Because if the voltage fluctuates or a breaker trips slowly, millions of dollars of computing hardware can fry in milliseconds.
Exactly. Powell is securing these contracts because they engineer the customized top-tier switchgear and redundancies required, so these facilities simply never go offline.
And that level of customized reliability is highly specialized, so it commands a premium.
It does. But, even as they capture this tech-driven growth, their legacy roots in oil and gas are also evolving.
Right, because while the pure petrochemical side saw declines, the broader oil and gas sector remains Powell's largest single backlog component.
Yeah, it comprises 32% of that $1.6 billion total.
But it's evolving to meet the current geopolitical and environmental landscape. They aren't just outfitting traditional crude oil refineries anymore.
No, they are securing major liquefied natural gas, or LNG, projects, capitalizing on the booming global export demand.
And they're actively moving into the clean energy transition space. The backlog now includes projects for hydrogen production facilities, carbon capture infrastructure, and sustainable aviation fuel plants.
Which is smart because whether the energy molecule is hydrocarbons or hydrogen, the facility still requires a massive electrical nervous system.
And Powell is adapting their core hardware to meet those specific industrial demands.
Right. But having a $1.6 billion backlog composed of utility megaprojects, hyperscale data centers, and advanced energy facilities is a phenomenal leading indicator.
Sure, but having a $1.6 billion backlog is great on paper. A company actually has to be able to build and deliver those products to recognize the revenue.
Exactly. An industrial manufacturer isn't a software as a service provider. They cannot just copy and paste a $75 million customized e-house and deploy it to a client site instantly.
No, they have to physically procure materials, engineer the schematics, build the enclosures, stage the equipment, and ship it out.
Yeah, recognizing that revenue requires flawless physical execution and strategic capital allocation.
So how is Powell allocating capital to ensure they can physically meet this surging demand? Like, how does a $1.1 billion revenue company deploy capital to avoid choking on a $1.6 billion backlog?
Well, we can analyze this through their recent inorganic and organic investments. On the inorganic side, in August of 2025, Powell acquired a UK-based company called Rensdack Limited for $18.4 million.
Okay, but on the surface, an $18 million acquisition seems negligible for a company of Powell's size.
It does seem small, but strategically, it represents a highly intentional move up the industrial value chain. Rensdack manufactures scatter remote terminal units, or RTUs.
Let's clearly define the mechanics of what that actually means on the ground. Historically, Powell's expertise has been the heavy physical hardware, right?
The colossal steel enclosures, the heavy-duty breakers, and the copper bus bars.
And for context, a bus bar isn't just a thick wire, it's a solid, rigid strip of highly conductive copper or aluminum that handles the immense baseline voltage coming into a facility.
Exactly. And Remstack brings SCADA, which stands for Supervisory Control and Data Acquisition.
So it's the software side of things.
Precisely. And a remote terminal unit, or RTU, is essentially a specialized microcomputer that physically interfaces with PAL's heavy hardware.
Oh, so it attaches directly to those breakers and bus bars?
Yes, and it reads the voltage, temperature, and current in real time and communicates that data securely back to the utility operator.
So by acquiring Remstack, Powell is no longer just selling a piece of passive metal infrastructure. They are selling a smart integrated node on the grid.
Which is exactly what utility companies today are demanding. They want real-time remote monitoring and predictive diagnostics.
They want to know a breaker is overheating 3 days before it actually trips and shuts down a power plant.
Exactly. So by baking Remstack's automation intelligence directly into their own physical switchgear, Powell creates a highly sophisticated, fully integrated solution.
Which makes their product line significantly stickier, much harder for competitors to replace, and it pushes them into higher margin software and automation territory. And here's where it gets really interesting.
Right, because while they're moving into automation software, they are simultaneously expanding their sheer physical footprint to handle the manufacturing throughput.
Yeah, around the same time in August 2025, Powell announced a $12.4 million investment in their Houston Jacintoport manufacturing facility.
And the specific physical logistics of that expansion reveal exactly how they plan to chew through the backlog.
So this expansion adds 335,000 square feet of productive capacity, specifically dedicated to their power control room laydown area.
Which is a 62% increase in yard capacity.
And when you are building custom-engineered e-houses that are effectively the size of small commercial office buildings, physical floor space is your absolute primary constraint.
The expansion of the yard is critical, but the most consequential part of that $12.4 million capital deployment is the waterfront.
Yes, they are using those funds to double the length of their existing shoreline bulkhead, expanding it to 1,150 feet.
Because you can have all the valuable completed e-houses in the world sitting in your laydown yard, but if you only have limited waterfront access, your revenue recognition is entirely bottlenecked by your shipping logistics.
Right, these structures are simply too colossal for standard road transport. They are routinely shipped out on barges over the water. Doubling that shoreline bulkhead is like a massive industrial grocery store opening up twice as many checkout lanes.
That is a perfect analogy.
Yeah.
It creates immense scheduling flexibility.
Powell can now load and clear multiple completed mega projects onto barges simultaneously. They can recognize the revenue faster, clear out the physical yard space, and take on concurrent utility or data center projects without causing a logistical traffic jam in Houston.
But this brings up the ultimate defensive investor concern. The top-line growth is stellar. The pivot into data centers and utilities is highly strategic, and the capital allocation directly addresses manufacturing bottlenecks.
But with rampant inflation and supply chain issues over the last few years, how is Powell protecting its gross profit on these massive, long-term fixed-price contracts?
Exactly. Because if a company bids a $50 million job today and the physical construction takes 18 months, they are deeply exposed.
Right. We are living through an era of stubborn inflation, highly unpredictable supply chains, and complex global trade dynamics.
And management explicitly outlines these macro risks in both the 10K and the 10Q. The company relies on highly volatile raw materials, specifically copper, aluminum, and steel.
Which are the fundamental building blocks of their switchgear and e-houses.
Yeah. And they face persistent supply chain delays for specialized, highly engineered components sourced from third parties. Plus, they highlight the looming uncertainty around U.S. global trade policy.
So a sudden implementation of new tariffs on imported steel or specialized electronics could instantly hike their material costs.
And that threatens to compress their margins to zero on previously bid contracts.
So how do they combat this? Are they just absorbing these costs?
No, they are actively utilizing strategic measures to protect margins. They're hyper-aggressive with their contracting strategy, particularly around something called bid validity dates.
Right, and let's translate bid validity dates for the listener. This isn't just dry contracting trivia. It means Powell is telling customers this price is only good for a very short window.
Exactly. It is the absolute linchpin of their profitability in an inflationary environment.
When Powell submits a quote for a highly scaled data center project, they aren't giving the client 6 months of leisurely review time to lock in that price.
No, they enforce strict, tight expirations on their bids. If a client delays and the global spot price of copper spikes next Tuesday, the original quote is dead.
Powell reprices the bid based on the new elevated commodity costs. If commodity prices spike, Powell isn't left holding the bag on an outdated quote.
They absolutely refuse to hold that bag just to secure a vanity revenue metric. And that strategy requires intense operational discipline and significant market leverage.
You have to be willing to push back on massive utility and tech clients.
And the objective proof that this strict pricing discipline is working is sitting right there on the income statement. Despite the tough macro environment, volatile copper prices, and supply chain headaches, Powell's gross profit actually improved.
Which is incredible.
It is. In Q1 of 2026, they recorded a gross profit of $71.4 million, up substantially from the $59.5 million they recorded in the exact same quarter the previous year.
They are fiercely protecting the profitability of every single dollar flowing through that $1.6 billion backlog. So what does this all mean?
Well, if we synthesize the data across these SEC filings, the narrative is really clear. Powell Industries hasn't just survived a 30% quarterly drop in their traditional petrochemical core.
No, they have successfully diversified away from a pure petrochemical play into a diversified infrastructure company. They basically executed a highly complex strategic pivot in midair.
Yeah, they transformed from a cyclical, oil and gas-dependent metal bender into a highly diversified electrical infrastructure powerhouse.
By aggressively hunting capital flows in the electric utility and hyperscale data center markets and strictly enforcing margin protections, they generated $41.4 million in net income in Q1 of 2026 alone.
And shareholders are being directly rewarded for this execution. In February 2026, the board of directors confidently increased the quarterly cash dividend to 27 cents per share.
Establishing an annualized rate of $1.08 per share.
Furthermore, when you analyze the financing activities on their cash flow statements, there are significant cash payments being made for employee tax withholdings on vested stock.
Which is a direct mathematical indicator of a significantly rising share price.
Exactly. The open market is clearly recognizing the underlying value of their pivot into utility and data center infrastructure.
I want to leave you with a final forward-looking thought to ponder as we wrap up this deep dive. If you consume financial media today, the AI boom is the dominant narrative.
Oh, it's everywhere.
Right. Almost inevitably, we often think of the AI boom as being purely about software companies and microchip designers. But what if the ultimate under-the-radar AI investments are actually legacy, heavy industrial manufacturers like Powell?
It makes a lot of sense.
Yeah.
The physical reality of artificial intelligence is incredibly energy intensive.
After all, an AI data center, no matter how advanced the multi-billion-dollar silicon chips inside it are, is completely useless without the massive, custom-engineered electrical infrastructure required to power it and protect it from going dark.
The most sophisticated neural network in the world is just idle code until it has reliable electricity flowing across a copper bus bar.
Exactly. The AI revolution requires an industrial-grade central nervous system to survive. Legacy, heavy industrial manufacturers like Powell are building the literal, physical pathways that make the digital future possible. Thank you for joining us on this deep dive into Powell Industries. Keep a close eye on how these quiet, under-the-radar industrial titans continue to shape the modern infrastructure landscape.